In this presentation, we will record a customer payment on account. In other words, a customer payment from a customer for work that was done in the past and for which we had billed or invoiced that customer within QuickBooks Pro 2019. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are on the home page. We currently have the open windows open. You can open the open windows by going to the view drop down and going to the open windows list. Within the open windows, we're going to the customers section because we're going to be concentrating in on this received payments. Remember the flow chart here, we have the create invoice and then the receive payment. The invoice will be different from the create sales receipt, so the invoice will typically be used if we do the work before we collect the money, if we're in that type of industry. So such as a bookkeeper, such as a law firm, oftentimes will end up doing work, and then of course invoice or bill the client and expect to receive payment at some point in the future, as opposed to something like a restaurant where we may do the work, of course, at the same point in time that we receive payment, and therefore those things happen at the same point in time. That's why this is here on the flowchart. And then we go to the record deposits. So anytime we have received payments, then this is a very restricted item. Notice that every item on the page usually has some type of journal entry to it. When we look at this item, it's very restricted. There's not even any accounts in it, but that's because they're fixed. The accounts are going to be a debit to or increased not to cash unless we change it to undeposited funds, kind of a form of cash. So undeposited funds would go up and accounts receivable would go down, because when we recorded the invoice over here, the invoice increased accounts receivable, the customer owing us money going into accounts receivable, and increased sales. So we're going to go on to this item now, and this item means that this would be triggered by, we have, for example, received a check in the mail. If we receive a check in the mail, we're going to go, okay, that must have been for a prior invoice that we made, and therefore we're going to go into the receive payment, and we're going to enter who we got the check from, the customer. So if we select the drop down, we're going to see that this was from music store stuff, this item here. I'm just going to type it in, music store stuff, and that'll populate it for us. I'm going to check the check. And then we have two invoices here that are open by indicated. So we could just put the amount and it will select the proper invoice or guess which one it should be, or we can select the invoice. Say if the check is for $816.27, then I would check this item and it will then populate the amount in the payment amount field. So those should match. If they don't match, that would mean that we got a partial payment, meaning if this amount was less than this amount, then we hadn't received full payment, and it would still show in accounts receivable that this customer owes us the difference. We're going to say keep the due date here. We're going to say the check number. This isn't our check number. Of course, it's the check number of the check that we received from the customer. It's going to be 4562. And so that's going to be the entire thing. What is this going to do? It's going to increase not cash, but undeposited funds. It's going to decrease accounts receivable, specifically receivable from the customer music store stuff. And note that those are not on this form at all. You don't see the journal entries at all. You don't see any specific accounts. And that's because QuickBooks tries to limit where we can adjust accounts to make the data input as easy as possible. In other words, if we had someone that's not the person who set up the QuickBooks system, we don't want them to be able to put it to an incorrect account. So QuickBooks tries to almost force us to enter the data as it thinks it should be, and in this case it should be fairly straightforward. The customer payment means that accounts receivable is going down, and it means that some form of cash is going up, and typically the default will be undeposited funds instead of the checking account unless we change it, and we can do that by going through this process here, because the undeposited funds will allow us to group all the deposits into the same one deposit that we can then go to the bank with and deposit at one time, and that will allow us to basically match up what's in the bank to what will show up on the bank statement for better comparison between our books and the bank's books when we do the bank reconciliation. So let's save and close this and see if it does what we would expect it to by going to the financial statements, going to the report drop down up top, going to company and financials, and going down to balance sheet standard. Balance sheet standard, I'm going to change the dates in the customized report. So let's change those dates in customized report. We're going to make it for the time period 01/01/19 to 12/31/19. So January 1st to December 31st, and say OK. And so it didn't go into checking account, it went once again into undeposited funds. So if we double click undeposited funds down here, we're going to see that we have this item, the 816. If we double click on that, we will get to our customer payment. Closing this back out, closing this back out. The other side is going to go to accounts receivable. Here's accounts receivable. If we double click on accounts receivable, we see that we have this, once again, this 816 there going the other side to undeposited funds. If we double click on that 816, we get back to our customer payment. Closing this back out, closing this back out. The other supporting document for the customer payment will be a type of subsidiary ledger. If we go to reports up top, if we go to customers and receivables and go to customer balance detail, and then we see the bottom of this should be 1,424. That then, going back to the balance sheet in the open windows, matches what's in the accounts receivable. Going back to the customer balance detail in the open windows, we can then see that we had this customer was music store stuff, and here's that particular invoice. And we can see that this payment, this invoice was paid by that payment. And this invoice is still outstanding, and therefore they still owe us $630. And that's going to be the standard that we should be able to see, the look of what a accounts receivable account should look like in total, as well as individual customers, meaning we should see something like invoice, payment, invoice, payment, invoice, or invoice, partial payment, prepayment in this case. And so that's going to be the type of system that we would expect to see. Now we're going to enter another one, and before we do, just note also that there's no effect on the income statement or profit and loss here. Why? Because we hit the profit and loss when we did the work in the past, when we created the invoice. So if we go back to the home page, in other words, the income statement is affected when we do the invoice, not when we receive the payment. When we do the work, which is typically at the point of the invoice creation, that's why the invoice drives revenue recognition when we record revenue. So we're going to do this again. We're going to receive payment once again. This time for Anderson guitars, if we select the drop down, it's the first one, or we can just start typing in Anderson. We're going to say that this will be a check as well, and we have the one invoice down here. If we wanted to check it, we can double check on that invoice and say, okay, there is the invoice. And then we're going to close this back out. That's the invoice we want. We have a $500 check that we received in the mail, or a $275 check we received in the mail. So we're going to pick that amount. And note, if we double click on this again, this invoice, you'll note that this one we had the 500, it was 525, and then we had this prepayment, this credit we applied to it. So there's 275 left that's still needing to be paid. Closing this invoice back out, we can see that here as well. The original amount was 525. The amount due is going to be the 275. That's what we still need. The difference, of course, then has been paid. And so now we got a check in the mail for that 275, and we are going to close out the remainder of this. The date we're going to say is the 26th for this one. So I'm going to say plus to get to the 26th. And the check number we're going to say is 5321. And that's going to be our information. So what's going to happen then? It's going to decrease accounts payable and increase cash, but not the checking out accounts, undeposited funds. So we will save and close and double check that once again. We're going to go to the balance sheet. We are going to say it went into undeposited funds, this account here. If we double click on that and scroll down, we see it there. The other side going to accounts receivable in the split window. Closing this back out. The other side is going to go into accounts receivable. Double click in accounts receivable, scrolling to the bottom, there's the 275. So Anderson Guitars going to undeposited funds is the other side of it. Closing it back out, we see that this amount is $1,149 in accounts receivable. Going to the customer balance detail, scrolling down, $1,149 in the total here as well. This particular customer was Anderson, so if we go up to Anderson, there's the $275 partial payment. So Anderson owes us nothing now, and we see the trend again. So we got an invoice, payment, invoice, payment. Payment happened first, then the invoice, and then the finishing of the payment. So these three all kind of link together here, bringing the balance down to 0. Now we're going to make the deposit. So if we go back to the balance sheet here and we scroll down, undeposited funds has $1,641. That means that we're holding on to checks or cash that we haven't gone to the bank yet. That's what that should mean. If you have undeposited funds and you don't have checks or cash that you're holding on to, something probably happened. Something went wrong somewhere. So we're going to go up to the home page, and if something did go wrong, then what you want to do is reconcile the bank account and check that you have everything input in the bank account, and then double check that there's no duplicate information, that information hasn't been duplicated. And that's the way you'd want to approach if there's something in undeposited funds and you don't know why it's there because you're not holding on to any checks or cash that you haven't gone to the bank with. So we're going to go to the home page. And then we're going to go to the record deposit. Now the record deposit here has this little 4 up top, and that means that there's something in undeposited funds consisting of 4 items, typically being created by the receive payment or the create sales receipt, that haven't gone to the bank yet. So that means that when we click this, it's not just going to bring up the deposit sheet, but it's going to bring up this pop-up, payments to deposit. Instead of, if those little 4 wasn't there, it would just go to this screen where we can manually enter a deposit. Here it's trying to connect it to the payments. So we're going to pick all of these. We're going to say, we're going to take all of these. And again, if there's a lot of them, if we have a whole lot of deposits, which would be nice, we can just say, I'm going to select all of those. That'll pick all the deposits we have. And then we're going to say OK. And it'll bring it to our main deposit screen where we can make sure that we are on the correct checking account. And then we can select the date that we're making the deposit, which will be the 2/26/2019 for our practice problem here. It's going to be a deposit in the memo. We could, customize the memo a little bit differently if we so choose. The more customization, the better for the memos, so that we can go back for our own purposes, for our own audit trail, and be able to double check any kind of information. So this is what we have. It's going to be a deposit of $1,641. This is important, because if we go to the bank, we want to make this deposit all as that one chunk, $1,641, so that when we reconcile our books to the bank statement, it'll both show $1,641 instead of our books showing $300 to $250, $816 in our checking account, where the bank records $1,641. That's the main purpose, because we want to check our books to the bank. That's a huge internal control called a bank reconciliation, and every company, big and small, should do that, because it's just one of those things that we can do in any level, and it's a huge check because the bank accounting system is usually pretty good. And so if we can tie our numbers to theirs, then that would be a good thing as a double check. So we're going to say save and close, and then we're going to go and check this out. We're going to go back to the balance sheet, and now of course this should go into the checking account. That's what we did. So we're going to double click the checking account, and it goes into the checking account here once again as that lump sum. It has the split saying, hey, there's going to be multiple deposits. That's basically what the split means. But it's in the checking account as that one number, which we should then be able to match out to the bank statement. Double clicking on that, we have then our deposit. If we close this back out, the other side should be in undeposited funds. If I go to undeposited funds, we say, hey, wait, it's gone. Why is it gone? Because there's a 0 balance in it. Now, if there's a 0 balance, there's a couple places I would usually go if I want to pick up more accounts and see details in the accounts. One would be to go to Lists drop-down and go to the chart of accounts. Go to the chart of accounts, and then we're looking for undeposited funds. We can see it's currently 0. It's a balance sheet account. If we double-click on it, we'll get that register type balance. And so here's our register type balance, and we can see these 3 items, I believe, are the ones that we had in our deposits, all the same date. If we click on any of these, we'll get back to our deposit screen. Closing this back out. You'll also note that the detail is in here as 3 items rather than 1 item, so that when you go back into the undeposited funds, you'll be able to track where each of those came from rather than just one group item as it was in the checking account. The other way you can do it, if you don't like this kind of setup and you're used to seeing the transaction detail report, you could go here and right click on it or go down to the bottom and go to report, or drop up, and then it's off the screen, but there's a reports undeposited funds, a quick report, and you can go to the quick report and see the detail in it. The other way I like to go, and most accountants would probably be using this form more than non-accountants, but you'd go to reports, you go to accounting and taxes, and then go to the trial balance. And you can think of this as a chart of accounts, 01/01/19 to 12/31/19. It'll list all the accounts, but it'll be in debits and credits, but it'll have all the accounts involved instead of just balance sheet accounts and then looking at the income statement. We don't have any of the subtotals, so it's nice and clean in that format. We just basically have a chart of accounts and the balances in them for this time period, although it is in debit and credit format. And then we can go to undeposited funds, and the 0 is there because there was activity through the time frame that we are looking at. And then double click on that, and we will see our report once again. Scrolling down, you'll note that these deposits are in there as individual items rather than lumping them into one deposit, and that's going to allow us to tie it to the prior entries that were made for the transactions for the undeposited funds. We can tie it out, in other words, to here's the 300, here's the 300, here's the 250, here's the 250, here's the 816, here's the 816. That would be difficult to do if we just grouped the deposit as one lump sum. And that's what should happen in the undeposited funds. The undeposited funds should go up, and then we should deposit them, and they should go back down to 0. So you'll note periodically we get back down to 0 balances in the undeposited funds. Should go back to 0 hopefully every day, because we're going to collect money, put it in undeposited funds, then deposit it into the checking account and 0 it out. And if we had a problem, we should be able to go into undeposited funds and see where that problem is, what's derived from that problem. We could say, here's the deposit, it's cleared. Here's the deposit, it cleared. Or here's it going into undeposited funds, and here's us depositing it into the bank. Here's it going into undeposited funds, and here's it going into the bank. So if there is a balance in undeposited funds and we don't know what it is and we're trying to figure out what went wrong, you can print this report out or export it to Excel and do that kind of matching system. And then you can figure out what the balance remaining consists of, which transactions are still there, and go from there as to, well, are there duplicate transactions? Did it get deposited into the checking account twice? And start to narrow down the options of what the problem is. And if you do the bank reconciliation, then that will really help to see if it was a duplicate transaction or what the problem may be. For more accounting information and accounting courses, visit our website at accountinginstruction.info.